Welcome to Borderless Finance. Tonight, you're going to fall asleep learning how to build credit in the United States, even without a Social Security number. Whether you're wide awake or drifting off to sleep, this guide will walk you through everything you need to know about building credit with an ITIN number. Get comfortable, close your eyes if you'd like, and let's begin your journey to financial freedom. Chapter 1. Why Credit Matters. Let's start with something important. If you're new to the United States, or if you've been here for a while but haven't been able to build credit, you might be wondering, why does credit even matter? In the United States, your credit score is like a financial report card. It tells banks, landlords, car dealerships, and even some employers how reliable you are with money. A good credit score opens doors. It helps you rent an apartment without paying massive deposits, buy a car with affordable monthly payments, get approved for a mortgage to own your own home, qualify for business loans to start your dream company, and even get better interest rates on credit cards. Without credit, life in America is more expensive. You pay higher deposits, higher interest rates. Sometimes you can't qualify for things at all. But here's the good news, the really good news. You do not need a Social Security number to build credit in the United States. Let me say that again, because it's important. You do not need a Social Security number to build credit. What you need is something called an ITIN, an Individual Taxpayer Identification Number. And tonight, I'm going to show you exactly how to use your ITIN to build credit from absolutely nothing to a score that opens every door. This process works. Thousands of immigrants have done this. You can too. Let's talk about what credit actually is. Credit is simply the ability to borrow money with the promise that you'll pay it back. When you use a credit card, you're borrowing money from the bank. When you pay it back on time, every time, the bank reports this to credit bureaus. The three main credit bureaus in the United States are Equifax, Experian, and TransUnion. These companies collect information about how you handle borrowed money. They create your credit report, and from that report, they calculate your credit score. Credit scores typically range from 300 to 850. A score of 580 or below is considered poor. 580 to 669 is fair. 670 to 739 is good. 740 to 799 is very good. And 800 and above is excellent. But here's what you need to understand right now. If you've never had credit before, you don't have a score at all. You're what's called credit invisible. In the United States, approximately 26 million adults are credit invisible. Many of them are immigrants. But being invisible isn't permanent. You can build credit from zero, and I'm going to show you exactly how to do that. Take a breath. You're doing great. We're going to walk through this together, step by step. Chapter 2. Understanding ITIN. Now let's talk about the foundation of everything, your ITIN number. ITIN stands for Individual Taxpayer Identification Number. It's a 9-digit number, just like a Social Security number. It even looks similar. It follows the same format, XXX-XX-XXX. But an ITIN is not a Social Security number. Let me be very clear about what an ITIN is and what it isn't. An ITIN is issued by the IRS, the Internal Revenue Service, for tax purposes. It allows people who don't have a Social Security number to pay taxes, file tax returns, open bank accounts at many institutions, and yes, build credit.
What an I-10 does not do, it doesn't give you permission to work in the United States. It doesn't make you eligible for Social Security benefits. It doesn't change your immigration status. And it doesn't provide a path to citizenship. An I-10 is simply a tax identification number. Nothing more, nothing less. But for building credit, it's everything you need. Who can get an I-10? If you need to file a U.S. tax return and you're not eligible for a Social Security number, you can get an I-10. This includes non-resident aliens who need to file tax returns, U.S. resident aliens who file tax returns, dependents or spouses of U.S. citizens or resident aliens, dependents or spouses of non-resident visa holders, and many others. Your immigration status doesn't matter for I-10 purposes. The IRS doesn't share I-10 information with immigration enforcement agencies. Their job is taxes, not immigration. This is important to understand. Applying for an I-10 is safe from an immigration enforcement perspective. How do you get an I-10? You need to complete IRS Form W-7. It's called the Application for IRS Individual Taxpayer Identification Number. You'll need to prove your identity and foreign status. This usually means providing your passport or your birth certificate plus a government-issued ID with your photo. You can apply for an I-10 in 3 ways. 1. Mail your W-7 form and documents directly to the IRS. This is the slowest method. 2. Apply in person at an IRS Taxpayer Assistance Center. You'll need an appointment. 3. Use a certifying acceptance agent, also called a CAA. These are IRS-authorized people or businesses who can verify your documents without you having to mail your original passport. The CAA option is usually the best choice because you don't have to mail your original documents. Processing time for I-10 applications is typically 7 to 11 weeks, sometimes longer during busy tax season. Once you receive your I-10, it's yours. You'll use this number for all your financial activities, taxes, banking, credit building. One important thing, I-10s expire if they're not used on a tax return for 3 consecutive years. So once you get your I-10, you'll want to file a tax return every year, even if you don't owe any taxes. This keeps your I-10 active. If you don't have an I-10 yet, that's okay. Getting one should be your first step. Many people watch this video while they're waiting for their I-10 to arrive. And if you already have your I-10, perfect. You're ready for the next step. Let's talk about how to turn that I-10 into actual credit. Chapter 3, the Credit Building Roadmap, 20 minutes. Building credit with an I-10 follows a clear path. It's not complicated, but it does require patience and consistency. Think of building credit like growing a garden. You plant seeds, you water them, you give them time, and eventually they grow. Here's the roadmap, the step-by-step path from zero credit to excellent credit. Step 1, get your I-10. We've covered this. Step 2, open a bank account. This creates a financial footprint. Step 3, get your first credit card, almost always a secured credit card. Step 4, use your credit card responsibly for 6 months. Step 5, monitor your credit score as it begins to appear. Step 6, continue building and add more credit types over time. Let's go deeper into each step. Step 2, opening a bank account. Before you can get a credit card, most banks want to see that you have a relationship with a financial institution. Many banks in the United States accept I-10 numbers for opening checking and savings accounts. Some of the most ITIN-friendly banks include Bank of America. They explicitly accept ITIN numbers and have Spanish-speaking services. Wells Fargo accepts ITIN for both checking and savings accounts. Chase Bank accepts ITIN, though policies vary by location. Citibank, ITIN-friendly, especially in areas with large immigrant populations. Credit unions are also excellent options. They're often more flexible than big banks. To open an account, you'll typically need your ITIN number, a government-issued photo ID from your home country, usually a passport, proof of address. This can be a utility bill, lease agreement, or official mail.
And an initial deposit, sometimes as little as $25. Once you open your account, use it regularly. Deposit money, even small amounts. Pay bills from your account if possible. Keep your account in good standing. Never overdraft if you can help it. This banking history won't directly build credit, but it establishes you as a real person in the financial system. And when you apply for your first credit card, that relationship matters. Step 3. Your first credit card, the secured card. This is where credit building truly begins. For someone with no credit history, getting approved for a regular credit card is almost impossible. But there's a special type of card designed exactly for people in your situation, the secured credit card. A secured credit card works like this. You give the bank a deposit, usually $200 to $500. That deposit becomes your credit limit. So if you deposit $300, you can spend up to $300 on the card. You use the card to make purchases. You pay your bill every month, just like a regular credit card. The bank reports your payment history to the credit bureaus. And over time, usually 6 to 12 months, you build a credit history. Here's what makes secured cards special. Your deposit protects the bank. If you don't pay your bill, the bank keeps your deposit. This makes them willing to give cards to people with no credit history. But here's the beautiful part. To the credit bureaus, a secured card looks exactly like a regular credit card. There's no mark on your credit report that says secured. You're building real credit history. Which secured credit cards accept ITIN? This changes over time, but as of 2025, some of the best options include the Deserve EDU Mastercard. Explicitly accepts ITIN holders, no credit history required. The Petal 2 Visa card uses your banking history instead of credit score, accepts ITIN. The First Progress Platinum Elite Mastercard, secured card that accepts ITIN applications. OpenSky Secured Visa, no credit check, accepts ITIN and reports to all 3 bureaus. When choosing your first secured card, look for these features. Reports to all 3 credit bureaus, Equifax, Experian, TransUnion. This is critical. Low or no annual fee. Some secured cards charge $40 to $50 per year. Try to avoid this. Reasonable deposit requirement. $200 to $300 is manageable for most people. Path to unsecured. Some banks will graduate you to an unsecured card after 6 to 12 months of good payment history, and they'll return your deposit. Applying for your secured card is straightforward. Go to the bank's website or visit a branch. Fill out the application. You'll provide your I-10 where it asks for SSN or tax ID. Provide your income information. Be honest. Include all sources of income. Submit your application. If approved, you'll mail or bring your security deposit. The bank sends you your card, usually within 7 to 10 business days. And just like that, you have your first credit card. Your credit-building journey has officially begun. Chapter 4. Using Credit Wisely. Getting your credit card is exciting, but getting the card is only step 1. What you do with that card over the next 6 to 12 months will determine your credit score. Using credit wisely isn't complicated, but it is specific. There are rules, and following these rules is how you build excellent credit. Rule number 1. Pay on time, every time. This is the most important rule in all of credit building. Your payment history makes up 35% of your credit score. It's the single biggest factor. Missing late, even once, can drop your score by 50 to 100 points. So here's what you do. Set up autopay for at least the minimum payment. Set phone reminders a few days before your due date. Treat your credit card bill like rent. It must be paid, no exceptions. But here's something important. You should always pay more than the minimum when possible. The minimum payment is usually just 1 to 3% of your balance. If you only pay the minimum, you'll pay massive interest charges. Ideally, you pay your full balance every month. This means you pay 0 interest. Let me give you an example. Let's say your credit card has a $300 limit. In your first month, you spend $50 on groceries. Your statement comes showing you owe $50. You pay the full $50 before the due date. Result? You paid 0 interest, and the credit bureaus see that you borrowed money and paid it back in full. Perfect. Rule number 2. Keep your utilization low. Credit utilization is how much of your available credit you're using. It makes up 30% of your credit score. Here's how it works. If your credit limit is $300 and you have a $90 balance, your utilization is 30%. If your limit is $300 and you have a $270 balance, your utilization is 90%. Credit experts recommend keeping your utilization under 30%. Some say below 10% is even better. High utilization makes you look risky to lenders. It suggests that you might be struggling financially or relying too much on credit. Low utilization shows you're in control. So here's a practical strategy. Use your card for small, regular purchases, maybe $20 to $50 per month on groceries or gas. Pay it off in full every month. This shows consistent activity without high utilization. Some people make a mistake. They think, I should use my whole credit limit to show I'm using the card. No, that actually hurts your score. Using $50 of a $300 limit is better than using $280 of a $300 limit. Rule number 3. Be patient with new credit. When you first open your secured credit card, it takes time for your credit report to appear. Usually, your first credit score will show up after about 3 to 6 months of having the card. This is normal. Don't worry if you don't see a score immediately. And when your score first appears, it might be lower than you hoped. Your first score might be in the 600s or even high 500s. This is normal. Credit scores are built on history, and you don't have much history yet. As you continue to use your card responsibly, paying on time, keeping utilization low, your score will climb. Month by month, you'll watch it grow. After 6 months, you might be in the mid-600s. After a year, possibly in the high 600s or low 700s. After 2 years of perfect payment history, you could be in the mid-700s. This is the garden growing, slowly, steadily, stronger every month. Trust the process. Show up every month, pay on time, keep utilization low. That's how excellent credit is built. Chapter 5. Monitoring and growing your credit. Once you've been using your secured credit card for a few months, you'll want to start monitoring your credit. Monitoring your credit means checking your credit reports and credit scores regularly. This serves 2 purposes. 1, you can watch your progress. Seeing your score climb is motivating. 2, you can catch any errors or fraud early. How do you check your credit? There are several free options. Credit Karma, free service that shows your TransUnion and Equifax scores. Updates weekly. Very popular among immigrants building credit. Experian.com. You can create a free account and see your Experian credit report and score. AnnualCreditReport.com. This is the official government website where you can get your full credit report from all 3 bureaus once a year, completely free.
Some credit cards also provide free credit score tracking as a benefit. Check your card's app or website. Many secured cards now include this feature. Checking your own credit does not hurt your score. That's a myth. When you check your own credit, it's called a soft inquiry. Soft inquiries don't affect your score at all. Only hard inquiries, when you apply for new credit, can temporarily lower your score by a few points. What should you look for when checking your credit report? First, make sure your secured credit card is being reported. You should see it listed in the Accounts section of your report. Check that the account is marked as open, the credit limit is correct, your payment history shows paid on time, and the balance is accurate. Look for errors. Credit reports sometimes contain mistakes. Maybe a payment is marked late when you paid on time. Maybe there's an account you don't recognize. If you find an error, you have the right to dispute it. You can file disputes online through each credit bureau's website. Provide documentation proving the error, and they must investigate, usually within 30 days. Growing your credit. Next steps. After 6 to 12 months with your secured credit card, it's time to think about expanding your credit. Here are the next steps. Step 1. Request a credit limit increase. Some banks will automatically increase your secured card limit after 6 months of good payment history. You can also request an increase. Sometimes they'll ask for an additional deposit.
Sometimes they'll increase it without requiring more money. A higher credit limit helps your utilization ratio. If you're spending $50 per month and your limit increases from $300 to $600, your utilization drops from 17% to 8.3%. Lower utilization equals higher credit score. Step 2. Graduate to an unsecured card. After 12 to 18 months of perfect payment history, many secured card issuers will automatically graduate you to an unsecured card. This means they return your security deposit. Your card becomes a regular credit card. Your credit limit might increase. Everything else stays the same. Some banks do this automatically. Others require you to request it. Check with your card issuer around the 1-year mark. Step 3. Apply for a second credit card. Once you have 12+ months of credit history and a score in the mid-600s or higher, you can apply for a second credit card. This time, you might qualify for an unsecured card from the start. Having multiple credit cards helps your score in several ways. It lowers your overall utilization, more total credit available. It shows you can manage multiple accounts. It increases the diversity of your credit. Important, only apply for a second card if you can manage it responsibly. Never get a second card just to spend more. Step 4. Consider a credit builder loan. Some credit unions and online lenders offer credit builder loans. These are small loans, usually $300 to $1,000, specifically designed to help people build credit. Here's how they work. You borrow the money, but the lender holds it in a savings account. You make monthly payments for 6 to 12 months. After you've paid it off, they give you the money. They report your payments to the credit bureaus, building your credit history. Credit builder loans work well alongside credit cards because they're installment credit, a different type of credit than revolving credit cards. Having both types shows credit diversity, which helps your score. You're no longer credit invisible. You're building a financial foundation that will serve you for life. Chapter 6. Common mistakes and how to avoid them. Building credit is simple, but that doesn't mean it's easy. There are common mistakes people make, especially people new to the U.S. credit system. Let's talk about these mistakes so you can avoid them. Mistake number 1. Missing even one payment. I've said this before, but it bears repeating. Missing even one payment can devastate your credit score, especially when you're just starting out. A single late payment can stay on your credit report for 7 years. The solution? Set up automatic payments for at least the minimum. Set multiple reminders on your phone. Link your credit card to a checking account that always has money in it. Treat your credit card payment date like the most important appointment of the month. Mistake number 2. Maxing out your credit card. Some people think, I have a $300 limit, so I should spend $300 to show I'm using the card. This is wrong. Maxing out your card, or even getting close, signals financial stress to lenders. It can drop your score by 50+ points. The solution? Keep your balance below 30% of your limit. Even better, keep it below 10%. If your limit is $300, try to keep your balance under $90, ideally under $30. You can use the card multiple times per month and pay it off multiple times. You don't have to wait for the statement. Mistake number 3, closing your first credit card. Once you get a better credit card, maybe an unsecured card with rewards, you might be tempted to close your first secured card. Don't. Closing your oldest credit card can hurt your score because it shortens your credit history length, it reduces your total available credit, which raises your utilization ratio. Credit history length makes up 15% of your score. The solution? Keep your first credit card open even if you're not using it much. Use it once every few months for a small purchase, then pay it off immediately. This keeps the account active and continues building your history. Mistake number 4. Applying for too much credit too fast. Each time you apply for credit, it creates a hard inquiry on your credit report. Too many hard inquiries in a short time can lower your score and make you look desperate for credit. The solution? Be selective. Only apply for credit you actually need. Space out applications by at least 3 to 6 months. Research cards before applying to make sure they're likely to be approved. Mistake number 5. Not checking your credit reports. Some people build credit for years without ever checking their credit reports. Then they discover errors, or worse, identity theft. The solution? Check your credit reports at least once every few months. Use Credit Karma, Experian, or annualcreditreport.com. Catch and correct errors early. Avoiding these mistakes is just as important as doing everything right. Now you know both sides. Chapter 7. Your Credit Building Timeline and Affirmations. Let's talk about time. Building credit doesn't happen overnight, but it does happen predictably if you follow the process. Here's what a typical credit building timeline looks like. Month 0, the beginning. You have your ITIN. You've opened a bank account. You've applied and received your secured credit card. Your security deposit is paid. Your card arrives in the mail. You're ready. Month 1 to 3, the foundation. You use your card for small purchases. You pay your bill in full, on time. You're consistent. During these months, you won't see a credit score yet. That's normal. The credit bureaus are collecting data about you. You're building a payment history. Stay patient. This is the planting phase. The seeds are in the ground, even if you can't see growth. Month 4 to 6, first score appears. Around month 3 to 6, your credit score will appear for the first time. It might be 580, it might be 620, it might be 650. Whatever it is, celebrate it. You exist in the credit system now. You're no longer invisible. Continue using your card responsibly. Pay on time, keep utilization low, watch your score begin to climb. Month 7 to 12, growth phase. Your score steadily increases. Each month of on-time payments adds to your history. Your score might climb 10 to 20 points during this phase. By month 12, you might be in the high 600s or even low 700s. At this point, you might receive a credit limit increase, graduate to an unsecured card, get approved for a second credit card, qualify for better interest rates. Year 2, expansion. With 12 to 24 months of perfect payment history, your credit is solidifying. You can now apply for car loans with decent interest rates, qualify for apartment rentals with massive deposits, get approved for better credit cards with rewards. Consider credit builder loans to diversify your credit mix. Your score might be in the 700s now. Year 3 plus. Excellent credit. With 3 or more years of consistent, responsible credit use, you're in excellent territory. Scores in the 740 to 800 range are very achievable. You now have multiple credit cards, a long payment history with 0 late payments, low utilization, possibly installment loans or other credit types, and access to the best financial products America offers. You've gone from credit invisible to credit worthy, from locked doors to open opportunities, from uncertainty to financial confidence. Affirmations for sleep. And as you drift off to sleep tonight, remember these truths.
Your documentation status does not define your worth or your future. Building credit is not only possible, it's predictable when you follow the steps. Every on-time payment is a brick in the foundation of your financial freedom. You're capable of achieving excellent credit. You're worthy of financial stability. Your dreams of home ownership, business ownership, and generational wealth are valid and achievable. Tomorrow you wake up one day closer to those dreams. Rest well. Your financial future is being built one month at a time. Good night from Borderless Finance.